Gold and silver, they're the ultimate safe haven collateral asset because they're the only assets that consistently survive a financial system reset. And when fiat fails, gold doesn't rise. Fiat reprices to gold. And once you understand the math, the history, and the pattern, the only question left is, how much gold and silver do I need? The question that I get asked every single week and constantly is, how much gold and silver do I need? So hopefully I will answer that question for you in this video. Imagine you're living in a house that looks solid from the outside. The walls are straight, the roof is intact, everything appears normal. But underneath, the foundation has been quietly cracking for years. You don't notice it today until one morning the floor shifts and you realize the structure you've trusted was never as stable as it seemed. But our money system is that house. And while it still looks familiar, I mean, we have dollars and it's digital or it's physical and all of that, banks, paychecks, but the foundation has been cracking ever since. Money has stopped being redeemable in something real. It's just an illusion. So today I'm going to show you what those cracks mean and how to protect yourself before that shift becomes impossible to ignore. You need to be ready when the rest of the public sees it. So let's start with the foundation itself. I'm going to take you to the 4 pillars of money. And let me tell you, it always makes sense to go back in order to move forward to really understand an issue. So we're going to start with the foundation because for thousands of years, real money rested on 4 solid pillars. As a unit of account for pricing, a medium of exchange, you give me this, I'll give you that, a fair unit of payment to make sure you are fairly paid for your labor today, and a store of value so that no matter when you use that money, you are always fairly paid for the labor that originally created it. And when those pillars are strong, purchasing power is stable. People can plan, you can save, societies can grow. But today, well, those pillars aren't strong. They're mimicked by fiat money. The structure looks the same on the outside, but quite honestly, the integrity, the foundation is already gone. And the moment the store of value pillar cracked, the entire foundation of our monetary system began to weaken. Here's how that happened. Because when the dollar was fully redeemable in gold, the public held the real power. You didn't like what the government was doing, you'd go in and you would exchange this gold certificate for real gold, for sound money, and you'd pull it out of the system, and that would force fiscal responsibility. When the dollar was fully redeemable in gold, the public held the real power, because if you didn't like what you saw the government doing, you'd walk in with this gold certificate and pull an ounce of gold out of the system. Redeemability forced fiscal discipline. It protected purchasing power without anyone needing a PhD to understand it. Then we moved to partial redeemability. And the illusion, it was still intact, but the anchor was already loosening. And by 1971, redeemability was removed entirely. The dollar became pure fiat, backed by nothing but the full faith and credit of the government. So as long as you trust them, you have faith, you will continue to loan them money, extend them credit. And frankly, today, we're entering the next phase, a new monetary system, digital fiat, programmable money that can be created, tracked, frozen, or devalued instantly. This is the full arc of how the public quietly lost monetary power and why and how we need to take it back by getting that redeemable gold back in the system again. So I want you to take a look at what we're all really working for. Because we're used to this, we don't even see what it says. But it doesn't say United States money. It says Federal Reserve Note. Well, this is a note, a debt instrument that is issued by a private corporation. I'm letting that sink in because a note is a debt instrument. It's not wealth. It's not value. It is a promise to pay backed by more debt. So every hour we work, every contract we sign, every asset we price, we're doing it in someone else's liability. And then that becomes our liability. And this is the moment the illusion becomes visible because we're not being paid in money. We're being paid in corporate debt that by design loses purchasing power the moment we receive it. Loses purchasing power up until we receive it, and then it continues to lose it afterwards. And really, frankly, once you understand that our currency is debt, the rest becomes really obvious. Every dollar in circulation was borrowed into existence, every single one. And the only way to keep the system running is to create even more. That's why public debt rises in a straight line. Can you see that? Rises in a straight line. And that's why every recession that you see there in those gray bars in this chart from the Federal Reserve Education Department, the Fed, another surge and the speed at which that money creation happened goes up. And that, my friends, is why your savings and your money and what you work for buys less and less every year. Because as debt goes up, the money supply goes up, and the value of the money that's already out there goes down. And quite honestly, this is not a mistake. It is the mechanism by design. Now, let's look at what happens when confidence actually breaks. When people think about protecting their wealth, real estate is usually the first thing that comes to mind. But during a fiat currency collapse, real estate does not behave the way people expect. In the Weimar Republic, which is not the worst case of hyperinflation, just the most well-known case, property values didn't rise with inflation. They collapsed in real terms. Maintenance costs exploded, taxes exploded, rents couldn't keep up, rents were fixed, and owners were forced to sell properties for pennies just to survive. In fact, in the Weimar Republic, the real estate index fell 84.5% during that reset. That is the moment that people realized a hard asset isn't a safe asset if it's priced in a dying currency, but it is an absolutely phenomenal opportunity for those who have sound money and hold their purchasing power intact. Now let's look at stocks. We'll take Venezuela as an example. The stock market became the best performing market in the world in 2012, 13, 14, etc. in nominal terms, just like my $10 trillion Zimbabwe note. The numbers looked incredible. Look at our melt-up market today. People thought they were getting rich. But then when the currency collapsed, the entire market lost over 99% of its value in real terms. not once, but frankly, you're seeing it twice here, but frankly, 6 times, because there have been 6 overnight revaluations in Venezuela. This is the danger of thinking the market always comes back. It only comes back if the currency survives. And when the currency fails, market fails with it. This is not rocket science. This is just logic. Now, in every currency collapse, Weimar, Russia, Zimbabwe, Venezuela, Poland, all over, gold didn't soar because it was volatile or speculative. It simply held its value while the currency and all those other fiat money assets were repriced in terms of gold. It was the currency that fell away beneath it. And that's why gold appears to reset overnight. But it's not gold changing. It's the measurement changing. It's the moment that the system is forced to reconcile decades of hidden inflation and debt creation and gold suppression. And when fiat fails, gold doesn't rise. Fiat reprices to gold. That is the pattern. That is the math. And this is why physical gold and silver, quite honestly, they're the ultimate safe haven collateral asset because they're the only assets that consistently survive a financial system reset because they have no counterparty risk. And let me tell you, in a crisis, all of those fiat money assets, all that confidence is lost, and they go to the asset that has never failed them for thousands of years. Now, let's talk about the metals and how they behave differently from everything else. Because quite honestly, silver is the fuse. Now, frankly, there isn't much of it above ground, and most of it is consumed. It gets used up in energy, technology, medicine, communications, national security, etc. And when monetary demand collides with industrial demand, the system can't meet both. And that's when silver blows the fuse. And we are in this transition right now where it's been those paper contracts that have been controlling price discovery. But what we're seeing right now in the markets with all of the volatility in both gold and silver, but primarily silver in this context, it's showing you a system that's losing confidence and exploding inward. Because if silver is the fuse, gold is the anchor. And it's the asset that every financial system returns to when that trust breaks. It carries no counterparty risk. It's the settlement asset of last resort. It's why you see all these central banks on a global basis buying gold. But together, when you're looking at both gold and silver, they sit outside of this fiat money garbage system. They sit outside that debt cycle, outside the illusion. So the constant question is, how much gold and silver do I need? Now that you understand what I've just shown you, we're going to answer that question because we have to look at fundamental value. And yes, I am redundant because it's that important that you understand this concept and you understand truly how much things are really worth, not the illusion of what they're worth. And the real mathematical anchor beneath the entire system, this number is not based on guesswork. It's based on how much currency has been created and how much real money exists to balance it. So let's take a look at that. And we've got to quantify the gap between the illusion, $5,000 or wherever it happens to be at this moment in time, and its true fundamental value, which is substantially higher than that. Because what we're seeing is that globally, debt is over $300 trillion, $324 trillion according to the IIF. and you divide that by all the gold that's ever been mined and even the gold that's in the ground, and you get a fundamental value north of $36,000 per ounce. And silver, at a conservative 20-to-1 ratio, sits above 1,800. That isn't a prediction, that's math. And the more of this that they do, the more money printing, the more debt, because they have no other tools, the higher that number goes. But you guys are probably sick to death of me showing you this $10 trillion Zimbabwe note that I cannot buy anything with. Fiat. Right? When the system resets, gold and silver don't rise to these numbers. Fiat falls to them. Now, let's bring this down to your life. Every asset you own, cash, retirement accounts, Wall Street products, they're all denominated in a currency that is being devalued by design. Every debt you owe, mortgages, loans, credit lines, is denominated in that same currency. Zang Enterprise Sound Money Strategy answers these three questions. How much gold do I need to protect what I've accumulated? How much gold do I need to eliminate fixed rate debt during a reset? How much gold and silver do I need to position for opportunity? And how can I leave dynastic wealth that I cannot outlive? How do I leave that to future generations? Sound money is not a trade. Gold and silver, they're not a trade because they go up or down in terms of dollars. They are your wealth insurance, as is community. That is also your wealth insurance. And it's critically important that you create surety in all areas of the mantra: food, water, energy, security, barterability, wealth preservation, community, and shelter. Get it done. Because for determining, you need that in addition to your gold and silver, but your gold and silver, you become your own central banker, and that's your foundation. And we're going to put that on your personal wealth profile, and that'll help us determine what those numbers are. How much gold do I need? How much silver do I need? And once you understand the math, the history, and the pattern, well, frankly, there's only one place left to look, and that's the system itself. Because the current fiat system isn't guessing, hoping, or speculating. It already knows what's coming, and its actions are telling this story. And by the way, this slide where I show you all the time, and we will be updating this on central bank gold buying and how accurate it is. They're not telling us everything. So this is minimum what you're looking at. And the central banks, the institutions that issue the currency, that do this, they're buying more gold than at any time in modern history. When central banks are net sellers, they're defending the currency. When they become the largest net buyers on earth, they're defending themselves. They're preparing for a reset quietly, deliberately, and very, very consistently. And it's not just governments preparing. When the institutions that run the system reposition, that's a signal. But when Wall Street starts shifting too, that is another level entirely. I've been in these markets, and specifically in the metals market, since 2002. And look at this. Morgan Stanley, Chief Investment Officer, recently endorsed a 60-20-20 portfolio. 60% equities, 20% bonds, and 20% gold. Now, is that the way I have my personal portfolio? Heck no, because those equities and bonds, they're made up of this garbage. Why would I? However, everybody should do what they're comfortable doing. But this is a radical departure from the old 60-40 model that denominated everything in fiat for decades. And when the largest institution in the world begins treating gold as a strategic permanent allocation, and remember, gold is a tier 1 asset, it's the safest thing you can do, not a hedge, not a trade. It tells you the system is entering a new phase. So central banks, they're buying gold. And Wall Street CEOs are allocating gold. But it goes even further. When you have top global strategists, they're making even stronger calls. This is where the message becomes absolutely unmistakable. Buy gold, sell Bitcoin. Chris Wood, one of the most respected global strategists, made that bold call for 2026. His reasoning is simple. He believes the store of value narrative around this, here's my physical representation of Bitcoin, okay? He believes that the store of value narrative around Bitcoin is on a much weaker foundation. I agree, 100%. Especially as quantum computing advances and regulatory pressure increases. Now, you've got gold, on the other hand, has no technological risk, no counterparty risk, no regulatory dependency, though there could be some regulatory risk. I'm not lying. I do anticipate potential, which is why I do this. But it is the only asset that has survived every monetary reset in recorded history, going back thousands and thousands of years. So when top strategists start shifting from digital speculation to physical gold, well, it's another confirmation, isn't it? The smart money is preparing for a structural change. And I think you should always do what the smartest guys in the room on any given topic are doing for themselves. Because when central banks, Wall Street CIOs, and global strategists all converge on the same conclusion, accumulate gold, well, the writing is on the wall, isn't it? And the only question left is, have you positioned yourself the way they have? And that brings us to your next step. Because gold and silver aren't just assets. They're the solid ground, the foundation you rebuild on when the system resets. They're how you protect what you've already accumulated and built. But it eliminates that dangerous debt, and it positions you for the opportunities that frankly always emerge as we go through this reset and what will be on the other side. The cracks are visible. Can you see them? And clearly, the shift is underway. And now it's your turn to move onto that solid ground. If you're ready to calculate your number, the ounces you need for your life and your goals, let's do it together. Our strategy specialists are deeply trained in this work. They take the time to understand you, your goals, your risks, your family, your future. And they're there to help you translate all of this into a very clear, personalized, sound money strategy. Because this isn't about guessing, and it's not about hoping you're positioned correctly. It's not about navigating a failing system alone. It's about coming together in community and having someone who understands the techniques of resets, the signals the system is sending, and the steps that protect real wealth. This is someone that will walk with you. We'll walk with you to build that strategy that fits your life and make sure as we're going through this that it continues to fit your life. This is your moment to move from uncertainty to clarity, from vulnerability to resilience, from reacting to preparing. And you don't have to do this by yourself. You can do it with us, people that know the path. because the goal is to come together in community and bring the gifts that we've been given and build a global community that gets redeemable gold, sound money back in the system so we can finally take our power back and stop this abuse once and for all. Because that's what it is. One person can't do it, but together I know we can. And until next we meet, please be safe out there. Bye-bye.